This podcast is brought to you in association with BSE and its investor awareness initiatives. The equity trading community in India has grown exponentially in recent years thanks to the roaring bull run in the stock market. Whether it's individuals who make a living through trading in stocks, futures, and options, those with a day job hoping to profit from a stock tip, or even those seeking the thrill, the world of trading is bustling with activity. The action, particularly in equity, futures, and options, has grown to such levels that even the capital market regulator has raised concerns. We are about to discuss the growing trading cult on Dalal Street and much more in today's episode, which is part of the BSE Investor Week special podcast. I am Nishant Vasudevan, the markets editor of the Economic Times and your host for this episode. Joining me today are two professional traders who have a front row seat in this ever-evolving world of trading. Piyush Chaudhary, founder of Wave Analytics, and Prashant Shah, founder and CEO of DefineEdge Solutions. First up, Piyush. Piyush has over 2 decades of experience in the field of trading and is a mentor to several newcomers. Thanks, Piyush, for being part of the show. To start with, markets have moved up so much, volumes have gone up, the depth has improved, and we are seeing more both trader and investor participation. But for you as a trader, how has life changed from, let's say, a decade ago?
So, first of all, thank you for having me on this show. There have been many changes actually. What happens is that we change, as traders, we change intrinsically and because of some extrinsic factors as well. Currently, what the things have been happening are that there have been a lot of changes in the algo space. A lot of languages that were active since till a few years ago have become redundant, and now Python has been dominating the scene. That is one of it. The bigger HFT players have been coming into the game from the foreign institutional area. So basically, the HFTs are there, and then the shorter duration strategies are also not becoming lesser viable because of the higher margins and higher transaction costs. So a lot of changes everywhere have been happening. So adaptability is the key part here right now.
That's a very important point that you mentioned, Piyush, about more HFTs, the high frequency trading. There's a lot of automated trading. There's a lot of algo trading happening. You also do a fair bit of automated trading. Now, from a trader's perspective, how has it impacted the way markets behave?
So let's understand basically what has been happening was that back in the day, if the two warriors were fighting, they were both fighting with knives and swords. Nothing else was there. But over time, things have changed to machine guns and then to F-16s and say something like nuclear warheads. So if somebody on one hand is coming with tanks and F-16s and everything, you can't sit there and fight with a kitchen knife. So you also have to adapt with the time. Now, algos in the sense have tremendous advantage over traditional ways of trading, especially with the disciplined way of execution. So adapting to the newer technology makes sense completely. However, when we look at the HFT firms in particular, their game is entirely about the shorter end of the shorter duration trades. Their trades don't last many minutes also. So the point is that on one end, we are having higher transaction costs, higher margins, and on the other end, these HFTs are there who can actually understand the order book so well that they can basically take the edge away from any shorter duration strategies. So it's the major negative impact has been only on the shorter end of the curve. When we look at the larger end, the longer end, the positional end, so if we are looking at the signal generation that I use, the API integrations that we do with the Python's part, so all that has evolved so well. And in fact, what has happened in the last 10 years, the entire ecosystem has grown. So if 10 years ago, it was difficult to find a platform to code on, or an API integration or learning resources or the staff. It was very difficult or costly. Today, it's easily available and not very costly at all, affordable. So, and as well as efficient. So there is an ecosystem that has developed simultaneously. Now there will be challenges. So obviously we have to go through the challenges. We have to pick our niche and we have to pick our segment and then play accordingly.
So, something related to that is obviously, if you have so many HFT traders coming in, if you have a lot of automated trading happening, obviously it has to be focused on some area. And that obviously is futures and options. In recent years, they have seen, a sharp spike in volumes. Majority of the trades are actually concentrated on options. You're seeing a lot of volume spikes happening on the expiry day. What is your assessment of this entire situation? Uh, do you see some kind of an excessive behavior happening in FNO?
So basically, what is happening is that, see, for the first time, India has been seen as an options hub. Now, when we say that, obviously, it has been because of, you can say, Bank Nifty started it, Bank Nifty's weekly expiry started it, and now it has become a kind of a craze. So, the part is that options are by themselves a wonderful instrument. But what is happening is that at the grassroots level, somewhere options are being taken as a gambling instrument. So there are two ends of the spectrum here. So when we look at the options buyer who's trading on the expiry day, probably gambling 5, 10,000, 20,000, 50,000. These are the majority of the traders which are trading with their less than 1 lakh capital and probably punting on a hero zero kind of a trade. So that is where the wrong part is happening. The second part of the wrong part is happening is in the option selling segment of zero DTE, where a large spurt in the volumes happens on the zero DTE. But not all traders understand Greeks very well. Now, options, though are an amazing instrument, they are mathematically also a very complex instrument. So just like if you go back in school and think of it, how many people used to be brilliant in mathematics? So best case is 10% or 20% of the traders, right? So obviously these are the traders who happen to make money in the long run. The rest are obviously just feeding that. So this is an unfortunate part, and somehow we have to go through it.
So it doesn't come as a surprise that both SEBI and government have been very uncomfortable with this entire rise in speculation through FNO. Do you really think that these steps are big enough to kind of deter these traders who want to make a quick fortune, who want to make a quick buck from FNO?
So if we understand the SEBI's intention has always been to protect those gullible people who want to multiply their money. But what SEBI is doing right now is that they are trying to increase the margins and they are trying to probably cut down on the weekly expiries and reduce the zero DTEs so that these people go out
And
of the system.
also increase the minimum contract size also.
Yeah, increase the minimum contract size. Everything is being done. But overall, if you also want to work on this, I think there are a few more factors to be taken into account. So first of all, if anybody wants to bet, if anybody was betting just 10, 20,000, they'll try to get in more capital. Trading is an addiction also to many people. And increasing the margins or zero DTs or reduction in zero DTs may not be entirely effective. Let's go back in time and check what US did. What in the US, options market started in 1970s. Okay, and between 1982 to about 2000, the entire penetration of their participation grew from about 7-8% of the population to about 40-50% of the population. Now, during that time, a lot of people also entered options market. What they did was that they introduced better instruments, spreads to trade with, not naked calls or puts just that much. They introduced spreads, they introduced swaps. And you will not believe that since 2005 in the US, zero DTE has been the flavor of the country. And the zero DTE volumes have grown even there, but they have been handling it. They have been handling it via various mechanisms. So I think the US model needs to be studied and how they have been understanding it. how they have been dealing with it. Simultaneously, SEBI should focus on investor awareness and education, product development. During this time when people have already come into the trading, so introduce or force the product maturity, force exchanges to increase or introduce the right products which are risk defined products, rather than let people bet on naked calls or naked puts. So instead, just introduce better risk defined products to that someone should only trade in spreads or swaps, so they'll be forced towards maturity.
Yeah, Piyush, those are pertinent points. Basically, rather than just, increase the entry barrier into it, you give them the right products and then you basically educate them how to use it. But as a professional trader, between futures and options, in your experience, uh, which is riskier, and where do you, I mean, which instrument can you make better money?
So when we look at futures, so futures are a very linear instrument. If a stock has closed at 1,000 and next day it is opening at about 990 or 980 and you are long, then you are obviously losing 1-2% on that with gap downs. But you can hedge it better via options. However, what has been happening here is that in India, the margins for futures have been increased. So, back in the day, say pre COVID, pre lockdown, we used to trade with much lesser margins, much lesser margin percentage to the lot sizes. Over time, the lot sizes have increased, and over time, the margin percentages have also increased. So it has become lesser viable to trade in futures. While we want to trade in futures, the ROIs have reduced. While we want to trade in options, stock options, the liquidity is not enough. So you can trade, but the entire universe of trading with the efficiency of risk, managing risk very well and generating reasonable returns. When we say reasonable returns, I'm literally not talking about 70-80% returns. We are happy with 30 to 45% if we are able to generate. So I that can be done via only with the help of options. But we need a liquid stock options market also. Only with index options, the entire strategies get skewed towards index. So the larger part of the curve, where the positional part of the curve, it gets difficult to be played with.
So it's very clear that being a trader is not easy. But
Absolutely.
Piyush, in your experience, what does it take to be a successful trader?
So there's an old quote, "Khud hi ko kar buland itna." So we have to, over time, just keep on adding to our skills. As traders, we start with just one pattern or one setup, just one small skill, and we think that we can make money with it. And but that edge may not last forever. So continuing to evolve is the mantra.
Yeah, and what is the most underrated skills? Something which is not discussed at all. What do you think is the most one skill that that is absolutely required, which is not discussed around for traders to be successful in trading?
What people don't understand is that the biggest pie of the cake, the biggest pie in the entire trading game is patience. And patience when you are waiting for your trades, patience when you are in the trades, patience when you are in the drawdowns and you are again waiting to come out of the drawdowns. Sometimes it takes months and months. And during that patience, keeping the calm temper, while you're obviously everybody around you should not feel that you are basically going through those losses and all. So patience, I would be saying as the key word here.
Great, great. That's quite inspiring. But you are a trader, but does that mean that you don't invest, you don't have a long-term portfolio? Is it that you only trade for a living and you kind of make your money in that?
So no, that is not the case. So what happens is that first few years I made that mistake. I used to keep 100% of my capital only for trading. Over time, I understood that now while that is an alpha in the market, what I'm missing out is the beta part. So the market is growing overall. So I can also grow with the market. I'm a contrarian trader. So being a contrarian trader, I miss out on the beta part. I would miss out on the rallies. So I would miss out on the stocks journeys as well. So I have separate portfolios for trading as well as investment. And I think that is after many years, I've understood that is the right way of doing it.
So before we wind up this conversation, what is your advice to all those individuals, all those youngsters who are kind of giving up their day jobs and looking to venture into full-time trading?
So that is a risky trend that is happening. I would suggest people who are beginners who want to make it big in trading to basically invest more in their education right now, to do courses from credible sources and learn about trading. We What you are going to come here and fight with is some of the best brains in the industry, and understand that stock market is one of the most difficult mind games in the world, and to become good at it, you'll really have to work very hard. So first of all, study extremely hard, study for months and years, and do a lot of self research, and then trade, and then test the waters with small capital before you venture into trading full time. So this entire process can take 1 to 3 years depending on your time allocation or your passion, but this will be worth it. Instead of just jumping into the pool and trying to swim through, you might just end up on the wrong side. So invest your time again on learning first, do self research, and I would suggest that test the waters with small capital.
Great, great. That was a wonderful piece of advice. Thank you, Piyush, for joining us. It was great having you on this show.
Thank you so much. The pleasure is all mine.
Now on to Prashant of Define Edge. While Prashant is a trader, author, and mentor to many in the trading community, his firm's trading applications are a big hit. Thank you, Prashant, for joining in. We have seen the markets evolve over the past many years. We have seen volumes go up multifold, the depth has improved, we are seeing more investor participation. Now, for you as a trader, how has life changed, let's say from a decade ago?
So yeah, I see markets are actually, the nature of the market is they will keep evolving. If we go back in history, right from there were no computers, and whether foreign markets or Indian markets. I remember clearly, in 2005 when we used to trade, it was a totally different market in many ways. The access to the tools, the knowledge, the subject, it was just totally different. If we see over a time, and recently the options were always there, but the margin rules change. So the nature of options and everything changed. So markets keep on evolving. And as a trader, you have to adapt in a way. You have to keep looking for the changes in the nature in terms of volume and the other things that is happening around in the market, and accordingly your system should evolve. Otherwise, you should remain, the focus should be on the discipline and execution. That's how you can deal with this.
Prashant, in the past few years, a large portion of the activity in our Indian stock market, it has been centered around futures and options. Mainly it is concentrated on options. Now you are also seeing some crazy volumes on the expiry day. What is your assessment of the whole situation?
So with options, normally people say that it is a very less risky product and you can, generate great returns. Whether it is, and of late option selling has also gained a lot of popularity. So whether it is option buying or selling, the truth is options are risky.
It's actually the truth also that many retail traders think that options are not very risky. Now the thinking is that if you buy options, the maximum you lose is the premium. Similarly, the ones who write options, especially on the expiry day, they have never really lost money in a big way. On the contrary, they look at it as some kind of a fixed deposit, a fixed income instrument. The question is, Prashant, is making money in options really all that easy?
So no way. Both these statements are misleading. So there are three possibilities when you take a position. Let's say I buy something in shares, whether it is a share, whether it is option or future. If I'm buying something, it will go up, or it will go down, or it will remain sideways. It will remain there on. In the option, when I buy option, if it goes up, I make money. If it remains there, then also I lose money. And eventually there's a time value. So I'll keep losing the money. Now, because of that, there's the selling option, selling of options became very popular. But with that, when it goes up, when it goes against you, the risk is unlimited. It can, keep going up. Option primarily was an instrument to hedge your positions. And now people have actually used it as fully as a speculative tool, which is very risky.
So I mean, the kind of the volume surge that we have seen in futures and options. So it doesn't come as a surprise that it's a matter of great discomfort for the regulator, for SEBI. If you look at what SEBI is actually in the process of implementing some of its proposals to kind of reduce volumes in futures and options. Then you also have the government, which has recently increased the securities transaction tax on sale of F&O. Now, as a trader, how do you think these steps will impact you and the markets?
See, they want to reduce the volume or the activity in options particularly. It is, of course, going to affect the markets overall, because if you look at the data, a very huge volume is contributed by prop desk, institutions, HNI in options. I mean, they have their own models and the ways of participating in options. It is also that they create positions in derivatives futures and use options for hedging and all of that. But if retailer volumes or the overall volume gets impacted, then their models are also going to be affected. And overall, then there will be, of course, the market dynamics will change of derivatives and options. So there will be some changes definitely.
Right. Prashant, now from a behavior point of view, from a market, as a market participant, what does it really take to be a successful trader?
Successful trader, I would say, see, one needs to understand a very important thing. Trading and analysis are two separate businesses. In general, people think that if I learn to analyze the market, if I learn to predict the market, what will happen tomorrow or what will happen down the line, then I'll be able to trade well. I think that's not true. So I think the trading part is totally different. You need different set of skills. And here I would say for success, I mean, you can call it like CPD. CPC stands for capital. You need good capitals. Then the process. And then third comes discipline, which is more of behavior and, kind of. So you should have that kind of discipline and you should stick to your models, which is extremely important. Even being disciplined is an edge. Combination of these three is what I believe is very important for success.
Right, right. Now, you are a trader, you're a professional trader, but do you also, from a personal finance point of view, do you also have a long-term stock portfolio? Where have you made more money from? Is it trading or investing?
Personally, I don't have a long-term portfolio as such. I follow a method of rebalancing. So that way it is like, buy and hold. I would call it buy and hold momentum, not buy and hold stocks. I believe in methods of exiting. I think, when you trade, the exit should be in your control. And overall, I mean, that has been my way of looking at it. Even my investment portfolios are more of the momentum investing.
So you don't probably hold it for maybe more than a year. You don't kind of hold it for a longer period.
Yes.
I mean, that is
mostly yes. Yeah, mostly yes. It gets rebalanced. And see, there are cases where the holdings were more than a year also, but it is because of the system itself. I mean, it wasn't planned.
Got it. Prashant, before we wind up the conversation, now there are many individuals who are giving up their daily jobs, their day jobs, and venturing into full-time trading. What is your message to them?
Why do you want to do it? I think why most of the people are looking for this as an alternative is they are not happy with the work they are doing and they think that here they can make money easily. So one very important, it's not that easy. I mean, this is a kind of profession which needs more practice. You need to learn trading the markets first. Trading markets doesn't mean you should know F1 and F2. It's like, you should learn how to follow methods, how to trade systems and all of that. So you need to be very disciplined. Some people actually are very passionate about analyzing markets. They like to read about markets, look at the screen, but all this will not make money for you. And if you want to do it, then you should at least have 2, 3, 4 years of good track record, which says that, okay, you can do it very efficiently, and then only you should do it. Otherwise, it can prove very risky or dangerous.
Wonderful, Prashant. It was great talking to you. Thanks for coming over to the show. It was nice talking to you.
Thank you. Thank you, Nishan.
That wraps up the episode. I hope our listeners have gained a lot of insight into what it takes to be a successful trader. From this discussion, it's very clear that the virtues to do well in this profession are actually discipline and patience. Thank you once again, Prashant and Piyush, for joining us for this conversation, and a big thanks to our listeners for tuning in. This episode was produced by Surohini Jain, sound designed by Rajas Nayak and Amrit Reggie. Stay tuned for the next one in the series. This is your host Nishant Vasudevan signing off. Have a great day.